Let me keep it real with you. Most traders don't know how to draw the Fibonacci the correct way. They throw it on random spots, thinking every single level has a meaning behind it, and then keep wondering why they're getting stopped out all the time. Because I used to do the same thing, and I blew multiple accounts thinking the Fib was a magical tool. But once I fixed how I use it, I finally passed multiple prop firm accounts. Today I'm gonna show you the only way you should be using the Fibonacci. Clear, simple, and no more guessing. Look, Fibs aren't magic lines which predict the future. They're just a measuring tape on your chart. And if you measure from the wrong spot, the whole thing is useless. And I used to stack every level possible, like I'm showing here. 23, 38, 50, 61, and 78. And my charts looked like spaghetti. The more lines I had, the less confident I felt. Everything changed when I simplified it. Picked the right level that actually mattered and built a system around it. So let's strip it down. Price makes an impulsive move to the downside, and then price comes back up. And the Fib is just there to measure the pullback. There's nothing mythical or secrets behind it. The mistake is that most traders treat all the levels the same, and that's how they end up gambling instead of trading. You've probably heard about the 50% retracement. Everyone swears by it, and sure, sometimes it works, but here's what usually happens. You enter at the 50%, your stop loss is somewhere above, and your target is down here, okay? And what usually happens is price bounces a little bit, and at the end it takes you out, and you are then the liquidity. I've been there thinking, clean bounce, this is it. And then 2 candles later, I'm out of the trade. And that's why I stopped using the 50% and completely stopped trusting it. It's because traders get impatient and the 50% is usually just bait. The level that actually changed the game for me is the 75. That deeper pocket is where market loves to dip and then reverse. The entries at 38 or other levels are usually where rookies get trapped and your reward is anyway smaller. And the 75% is usually where the real continuation kicks in. And it also has a fixed risk reward of 3R. And that's why my system is built around it. Before you even touch the Fib tool, you need the right leg. And by leg, I mean a clean move with momentum that breaks the structure. So if price pushes up and breaks the last high, this leg right here is good to go for buys. And if it dumps, that's your leg for sells. And let me be clear, those breakout structures have to be with momentum. No tiny breaks like this, or even here, smaller breaks. Forget about that. Those are not with impulses. These breaks have to be obvious, big and clean pushes. You also shouldn't be trading sideways market where it's been consolidating or like this. Forget about it. Do not trade it. My tip, just take these breaks, which you can obviously see. And after that, you can pull out your Fibonacci freely, from low to high and from high to low, waiting then for price to retrace and then move your way here and here. Oh, and real quick, if you want my exact 3-step checklist that ties this all together with Fibs, I put it into a free blueprint. It's the same list I trade of every week. Links in the description. Alright, so the Fib is drawn, but here's where most people get it wrong. They just trust the Fib on their own. Don't do that. You want something else lining up with it. So inside that leg, what you want is a fair value gap, like this and like this. Because when the Fib overlaps with another confidence, that's when the trade goes from okay to high probability. And here's another trap. Sometimes price just dips to 38, 28 or whatever, shows a tiny green candle to the upside, and then everyone is thinking, yep, reversal incoming, let's go for it. I used to fall for that all the time. But those tiny pullbacks are usually bait. The real continuation digs deeper, usually in this area, and the perfect one is the 75. And that's a move I wait patiently, and you should also. So here's actually how I set it up. My entry is at 75, my stop loss is at 1, and my target is at 0. So I put my pending order right there, and I also have an extra rule that keeps me safe. Once price enters me in at 0.75 and then moves up to 0.5, that's where I move my stop loss to break even, and this keeps me risk-free. And after that, I can just let it play out without any stress or thinking about the trade. And I do the same thing on a short. Entry at 75, my stop loss at 1, my TP at 0. Let's do it like this. And after price enters me in at 75, goes back down to 0.5, I then can do the exact same thing like I did with the long, I pull my stop loss to break even and another stress-free trade. Let's say price breaks this high. With this impulsive leg, what we can see is we have a fair value gap inside that leg. Let's mark it out like this. This means it's a valid trade. So from now on, I can pull out my fib from the low to the high, drag it out a little bit to the right so we can see it a little better. Now I just place my pending order at 0.75, my stop loss at 1, my target at 0. With this, I always get a risk reward of 3R. And you know, with the extra rule of going break even at 0.5, this makes me a risk-free trade. And we can let it play out. There you go, it's a 3R trade. And even if price comes back down to tag me out, I'm okay with it. I didn't win anything, I didn't lose anything. Now let's flip it. Market dumps right here. We can see inside that leg, there are multiple fair value gaps. This one also aligns with the entry that's even better. So what do we do here? We pull out the Fibonacci from our high to the low, and we then just wait for price to tag us at the 75% and then let it do the rest. It would look like this. Entry right here, stops at 1 TP at 0. You can see again, it's always a risk reward of 3. Let me warn you about a few things. If you see this bearish impulsive leg, don't be drawing another Fibonacci from this low to this high. This is like ultra intra leg trading, whatever. Just pick one leg which is beautiful and stick to it. And also be consistent with placing your fibs from the most recent break of structure, and don't ever bother with fib if you don't have a strong impulsive leg. And please stop forcing trades at 23 or 38, whatever, just because you're bored. Those are the worst outcomes you will have. So here's the truth. Fibs aren't magic. They're just a tool. But when you use them with structure, fair value gap, and the 75%, then they actually work. And most traders, they will keep on blowing accounts because they use the fibs the wrong way. Me, I'll never draw them ever again like that. And if you want my exact blueprint I use every week, links below.